Hi everyone, welcome. We're going to this is our first session, right? So we are going to be looking at some basic things in forex trading, like defining forex trading and what we will be really doing in forex trading. And in doing so, I'll be giving you a roadmap on how you can learn forex trading, and we're just going to be discussing these things like on the surface, but later as we do more sessions, we're going to be looking into this topic in greater details. So what is forex trading? That's the first question that we need to ask ourselves and answer. So what is forex trading? So basically forex trading is it is the buying and selling of currencies, or rather, we can say forex trading is the exchange. It is the exchange of different currencies on the global market. So global market is it is one of the biggest markets in the world. So we have quite a number of things. We have it's now forex trading is not. I wouldn't say now, but forex trading is not only limited to currencies. There are other things that we can actually trade on the global market. That is the securities like stocks. We can also talk about CDFs. We can also talk about we have metals, we have indices, synthetic indices, and I know most of you would have heard about the volatility indices by now. Is something that has been trending for some time now. So those are some of the things that can be traded on the global market. So this is our definition. Forex trading is the exchange of different currencies on the global market. So when we say exchange, we are talking about buying and selling of these commodities or currencies. So as traders, we make profits from buying and selling in the market price. So the question is, how do we profit from the movement of the forex market? We need to make a prediction. Is the market going to go up or is it going to go down? If the market is going to go up, we buy. If the market is going to go down, we sell. So in doing so, if your prediction is correct, let's say you say that we are going to, the market is going to go up, then you buy, you are going to make profits. If you say the market is going to go down, then it goes down, you're going to make profits. So you realize that I believe that most of you're listening to this video, or you have joined this session because you want to have financial freedom. You want to make money on your own terms. That's why you have become interested in learning forex trading. But there's something that you need to know. As much as forex trading can be profitable, it is also risky. It is significantly risky. You can lose a lot of money if you just do it for the sake of making money. You need to be consistent in profit making. You need to focus on the skill. So it's not all about buying and selling and making money. There are a lot of things that you need to know and understand about the forex market before you start to make profits. So don't think that it's going to be all rosy every day or every week. There are going to come times where you're going to lose a lot of money if you're not careful, if you're not practicing risk management. But no matter how tough or no matter how difficult it's going to be for you as a beginner trader, don't lose heart, don't lose hope. You need to have some little faith. You know that one day you are going to be profitable, and you just need to pay attention to the small details in the forex market. Take it easy, one step at a time. You are not in a competition with anyone. So we're saying that we make profits from predicting the movement of the market, right? So how do we then say that we are buying or we are selling in the forex market? So let's do something here. Let's change this to blue, and we can reduce this to 20 maybe. Okay, let's keep it at 24 for now. So we have forex trading, right? And we say that it is buying and selling. So either we are going to buy or we are going to sell. But before we make this decision on whether we're going to buy or we're going to sell, there are certain things that we need to take into consideration or that we need to look into. That is the reasons on why we have to enter a trade. So if we are going to be using a more forex trading term, or the perfect term to use for this, we say confluence factors. So confluence factors are basically the reasons why you have to enter a trade. So the traditional way of trading, or the correct way of trading, yeah, there are many approaches on how to trade, but what most people do, you need to have confluence factors reason on why you have to end a trade. So you need to have at least 4 reasons on why you have to end a trade. Once you have these 4 reasons, 5 reasons why you have to end a trade, it's going to give you an edge in the forex market. And by edge, I mean an advantage in the forex market than other people. So how are we going to make a decision whether we are buying or we are selling, right? So one thing that you need to know is you need to know where and when to end a trade. So it's when to end a trade, right? Let's reduce this to 20, right? We need to know when to end a trade. We also need to know where to end a trade. So these are some of the most important questions that you have to answer before you press your buy or your sell. So by when we need to end a trade, not too early, not too late. So how do we make a conclusion now? This is right now the perfect time to end a trade. So one thing that you have to remember is if you are able to answer this question, you'll be making what we you'll be having what we say an entry strategy, because you need to know when to enter. Timing is very important for forex trading, because one thing that you have to keep in mind is forex traders, we are restricted in the market, or our activities are limited to leverage and margin. So you don't need to get caught in margin call or to over leverage your account. Those are the 2 things that you need to keep in mind. So in order for you to not get caught by full margin, you need to know when to enter the trade. So one thing that can actually help you to know when to enter trade is to know the market momentum. So this is also another idea that you can apply to know the timing of entering a trade. So how do you know the market momentum? You look at candlesticks. So we're going to be looking into candlesticks patterns. So candlestick patterns are very important because they give you an idea of when to end a trade. So we are looking at candlestick pattern, right? So candlestick patterns are very, very, very important in forex trading because you know when to enter. You are, as we are going to be discussing this topic in detail, you realize that there is what we call exhaustion, there is what we call indecision candlesticks. So they can give you a hint on when to enter the trade. Don't worry if you miss what I'm trying to say right now. You just need to have this picture of what I'm trying to say, but we'll explain everything in detail as time progresses. So the other thing that we can look into when we are deciding when to enter is the chart pattern. Chart patterns are very, very important. And you're going to realize chart patterns, we are also going to use them to know where to enter trades, right? So we also explain that in detail in our later sessions. So you need to know chart pattern. Chart patterns, they are very, 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 very important in forex trading, right? So moving on to the where part, this is where most of the magic happens. The where part, because it's not, you can have the when, but if the when is not aligning with the where, you're not going to be profitable. So the when and the where, we have to see these things certain points or certain time in the forex market. So if the when and the where aligns, then you can enter a trade and you can be profitable. So to answer the where question, you need to look into what we call support and resistance. Support and resistance is a very, 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 very important topic in forex trading because it can help you to understand the turning points in the forex market. So this is how you can actually predict the where part of our question, right? So we have support and resistance. So basically, support and resistance, these are market levels where we anticipate the market to turn. Let's say we are going up and a point where the market tends to go down, we can say that it's resistance. In the level where the market is going to get rejected and then it pushes to the upside, we say that is called support. Don't worry about this. We'll look into it in greater detail later. So supply and resistance, these are levels. Then we have another concept that is supply and demand. Supply and demand is more of support and resistance, but rather instead of us looking into levels, we are now looking into zones or areas, right? So we are not only limited to one level, we are looking into a whole zone. And because the market is not only going to turn when it reaches a certain level, but it turns when it reaches a certain area or a certain zone. So be looking into this later also. Then the next thing that you have to understand is that is worth to be mentioned when you say when we mention support and resistance is the trend lines. Trend lines are very, very important. They can also give you the turning points in the market. So we're going to be looking into trend lines. And trend lines, they go hand in hand with channels. I don't know if it is double N or a single N, but yeah, channels, right? Trend lines and channels, they are equally important. Then the other thing that you have to keep in mind also, or rather that you need to understand is the chart patterns. We have mentioned it earlier, but it's also an important concept to know where to enter enter a trade. So we have chart patterns, right? Chart patterns. So now there's something that I want you to understand when we talk about the way aspect here. When we answer this question, we are trying to predict the direction of the market, and we call this the market bias. Market bias is very, 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 very important in the Forex market. I still remember when I started trading, I used to ask myself, how do I know that the market is going to go up? How do I know that the market is going to go down? And at times I press buy, then the market sells. I press a sell, then the market goes up. So that is a big challenge that I used to experience when I was still a beginner trader, until one day I was having a discussion with a friend of mine. We had started trading earlier than me. So in other words, he was more experienced than me. He told me that if you want to be profitable in the market, you need to know the direction of the market. If the market is going down, you need to look for selling opportunities, or rather for shorting opportunities. So just for the sake of interest, when we are selling in the market, we say that we are going short. When we are buying, we are going long. So you're going to see me using the same those terms quite a lot. So that was the problem that I was having. And this guy said that if you want to increase your survival in the Forex market, you need to know the direction. Then he gave me an example that I'll never forget. He said, do you know that one day if you get yourself caught in a shipwreck, if you want to increase your chances of survival, you need to go with the waves of the sea. Because if you try to go against the wave, you're going to get exhausted early, and you are definitely going to drown, and you definitely die. So if you want to increase your chances of survival, try to go with the currents. If you go with the current, then you increase your chances of survival. And this same concept applies in the Forex market. If you go with the trend, then you are good. You are going to be profitable. That's why you see a lot of people, and this is something that you're going to hear from a lot of people. You trade the trend. So we want to go with the wave when in the Forex market. You need to go with the wave. No matter how good a setup is, if it is going against the trend, don't go for that that opportunity, because you will lose money. I've had a lot of people asking me questions like, sometimes we buy, then as soon as we put stop loss and take profits, the market then comes back to hit our stop loss, stuff like that. The reason why that is happening, you are going against the trend. If you're moving with the trend, you'll be trading market momentum. And when the market is going up, you take long positions, then definitely you're going to be profitable. You're going to make money. So and one thing, the other thing that I want to mention is they are talking about support resistance, supply and demand, trend lines, chart patterns. This is also something that we call the market structure. So we are going to be looking into that topic in later, and you'll be discussing about the highs and the lows, discussing about the golden rules in the Forex market that can guide you to be profitable in the Forex market. So once you have answered the when and the where question, right, you can now come to a conclusion. This is how you do it. Let's just do it like this. Like this. So when you come to a conclusion, you now know the directional bias. Let's say you now know the bias, the direction of the market, and you know where to end a trade, right? Is it going up or is it going down? Then you know when to end a trade, that is timing. You're looking at what? Momentum, market momentum, and exhaustion in the Forex market. You can then make a decision that you want to buy, or you want to sell. So this is how you make your conclusion. So you can now make a decision. Are we buying or are we selling? And one thing that you need to keep in mind is once you enter your trade, once you place your buys and your sells, please try not to look at the market. That is going to give you confusion. Just make sure you put your stop loss, your take profit, then you leave the charts or you look at a different chart. Remember, we are trading our analysis. We are trading the trend. If the market is saying that we are going up, you have known or you have managed to spot the perfect zone to place your buys and your sells, and you know when to enter. Let's say we are at a level of support, and then there's an exhaustion candlestick. We are going to buy that market. Let's say we are at a level of support, then there is a hammer or whatever the candlestick pattern that is there. We are definitely going to buy. And when we buy, we know that the market is going to go up. We leave them the charts to our trade to play out in our favor. So don't give yourself stress, or rather you are going to be closing your trades too early, like when they are in profits. You don't let your winners run. We want to let our winners run so that we become profitable. If it is going to hit our stop loss, let it be. If it hasn't hit your stop loss, you don't close your trades. Let them run. Allow the market to breathe, because if you are going to see let's say your money is on $30 profit, then it comes back to $10 profit. You don't close your trade before it hits your take profit. Allow it to breathe, because remember, we are trading the trending market. So it's definitely going to make highs and lows. So that's how the market works. So trade the trend, go with the wave in the market, let your trades run, allow them to reach your take profit, then you take your profits. If they hit the stop loss, you look for another trading opportunity. That's how you become profitable in the Forex market. So guys, this is it for today's session. So see you in the next session. We're going to be talking about something different. So basically, this is introduction to Forex trading. If you are going to be doing this on your own, just look into these topics. So when I come, I'll be explaining all these things I'll be giving you more detailed information, and it's going to be simplified. We want you to be profitable traders, but you have to remember that it is always important to take baby steps. You're going to get there. You're going to be a great trader one day. So take your time to understand these basics. Then when we do the advanced stuff, you'll be able to implement these things, and you'll be a great trader one day. So cheers, guys. See you in our next session. Thank you.